What's going on, everybody? I hope everybody had a great day. I had some time to kill here, and I usually use this time to prep, so I'm just gonna do what I do normally and leave it on stream. So if you want to join, great. If you don't, see ya. But I'm just gonna go over some stuff and basically just think out loud for the most part. So yeah, so welcome. But today was a little wacky. Let me come on over. I just noticed one thing about today that was really annoying was that it was just a lot of sloppy and uncertain PA, and it kind of makes sense. We didn't really have that much data. Today we do have a lot coming the rest of the week. So from that point of view, it does make sense. There were a few names that got absolutely smoked. I'm gonna go over those as well. But yeah, ultimately I'm just kind of, doing what I do. I got to update a bunch of charts, so I'm going to do that. And we'll see if any of these names actually had any sort of structural change or not. Days like today, a lot of the time they come out of nowhere, and it seems as if, again, a classic statement that we've been hearing quite a bit, but like, oh, the world's ending, we're going to retrace, it's time to come back down, we've been on such a big run, blah blah blah. But a lot of the time when you have huge ranges like this is kind of just a byproduct of it. And again, at some point in terms of, when we do get that retracement or pullback down, it's going to make sense for it to happen. The only difference here is when I'm looking at SPY, NASDAQ, you name it, anything really that's at an all-time high. It's just, to me, it's much more difficult to try and pick the top of anything. And the reason I say that is because a large part of my trading does come from the idea of liquidity, right? So we're essentially using those areas or pools of liquidity as targets in a sense. And the fact that, we really don't have anything to our left anymore, that's, to me, made it much more difficult. And you can kind of see it by the price action in itself, and this is by looking at the weekly. If we're to look at it daily, it's going to look even more jumbled like this. But we really had no imbalance created since taking out that all-time high. And ultimately we held previous resistance, quote unquote, is now support. But from this point here, really, we haven't created any imbalance to kind of dictate any sort of direction. I mean, we still technically have a chance. Like, this is what it's looking like at the moment. But that's if, throughout, what do we have? 3 days, 23 hours left to work this out. But if, let's say, we put in the low of the week today, that would technically be your bullish imbalance above. And, that would be a little bit more of foresight into what I think could happen moving forward here. But until that happens, I'm not going to try and front run it or jump the gun on something until there is really some, the famous word confirmation that it's going to actually do that. And I'll get that confirmation in either 3 days, 23 hours, or if price retraces down to the low of that imbalance there at 18,144. So that's kind of what I'm looking at there. We'll get into all these names, but I just want to look at NASDAQ from the daily time frame as well. Come on, load up. You usually don't take this long. And we'll see. What's going on here? Why is this so slow? This doesn't happen on this computer. Let's see. This one's moving fine. Our daily is, oh no, here we go. All right, so with the daily, let's just see. So I guess we really didn't set a range. So by taking out this high here, I have my low. Really, we took it out with this run here. We got a retracement, but not quite into discount of the range. So that's telling me that the range isn't set. What does that mean? That means that at some point, I do believe that we will get a 50% retracement on that range, but when exactly? Really, I look towards when we get some sort of imbalance to the downside. It plays on any time frame. But currently, actually, with how we closed today, we created a bullish daily fair value gap right here. So, is this a fair value gap that I would value all that much? Not necessarily, to be honest. Anything in premium, it doesn't really line up with my model where I like to get things in discount. And I also want to do this. I'm just, too many people have asked me this question. I do not trade using fibs, so I'm turning off everything other than really the measurements. It's been driving me nuts. I don't use fibs per se. It is for measurements in terms of our overall range. That's all I care about. So I just want to know where 50% of the range is. Are we in discount? If we're not in discount, then um, it's not something that would technically line up with my trade, but that doesn't necessarily mean that this can't act as a movement higher. Very similarly to this, look, we did not get into discount here, and we did make another move higher for another new high. So it is very possible that this continue to move higher, but just really doesn't line up for me all that well on the daily time frame. Now let's pop over to the hourly. And again, this is just really what I do every day, just in preparation for whatever's to come next. So you know what? Let's start with the 4 hour here. Let's look at the 4 hour and then we'll go to the one. This was the move that I envisioned like last week. And, clearly we did not get to the imbalance that I expected, but it's okay. It is what it is. But if we're to look here, let's just make sure it lines up as well on the 4 hour. Very good. Okay, so no discount imbalance there. Price runs higher. Again, these imbalances that are in quote unquote premium it doesn't necessarily have to come to 50%. The way I look at it, and the reason why I'm kind of stingy about that, is because what would offer you the highest risk reward? Well, if you're buying something above 50%, essentially you're playing for 20-30% of the range, when your downside risk for the trade to really go bad is 70-80% of the range. So that doesn't make all that much sense to me, and that's why I don't do it. But again, we're 62. Get off that. It's, again, this is not fibs. This is just measurement. That's all I care about. If there's no imbalance, right? Everybody talks about that 62 to 79. If there's no imbalance there, I bet you that fib range doesn't work. But here, this is what we're currently sitting at. So very similar to the daily, where we have quite a ways below to get into discount of this range. And again, it doesn't necessarily have to happen. I'm just leaving that out there. It's just a terms of probability type thing for me, where as we get deeper in discount of a bullish range, why would I classify this as a bullish range? And in short, we took out multiple sets of highs with that price run. Again, this move here did not get us into discount. So to me, the range isn't set. So I got to set my range up here. And we do have a bunch of imbalances down there in discount, but again, quite a ways away. And I'm just curious to see, do we end up painting that weekly bullish fair value gap, or is this daily imbalance going to hold true and shoot us up for another run? That way, clear the way for this imbalance to set and a continuation to more all-time highs to come. Kind of a waiting game, which stinks, but it is what it is. And I think it's not just me when I say that. If you were to look at price action today, and I do plan on reviewing that, just no imbalance is formed really until the end of the day, and it overall was kind of just sloppy and garbage. I think if I had to guess, there was a lot of people that probably just got chopped to death on that. I ended up taking 2 trades. One was pretty decent. It was a stop and profit, and the other one was just a really fast stop out. So that was with futures, and obviously Tesla. I took a Tesla trade and it backed up on me. But I want to get into Tesla as well. So yeah, let's see. Does this imbalance hold? Not quite in discount, but is this imbalance on the 4-hour time frame going to be enough juice for us to get that continuation move higher and create a higher time frame imbalance for us to feel pretty good about continued upside? So that's first. And I could do SPY as well, but SPY and NASDAQ these days, they've been pretty close. NASDAQ actually on the smaller time frame today was the ugly duckling there. We did not set a new high while we did on ES. Interesting. I'm just looking at ES on the hourly here. ES is SPY for anyone who's curious. I just used the futures data. To me, you're getting more information. But let me just drop some of these imbalances here on SPY and just take note of it. And again, I say this a lot, but the market's fractal. What that means is we currently have a pretty large bullish range, right? But we also have little smaller time frame bullish runs inside this overarching, medium term range, if you will, right? If you break this down into each price run, by, okay, this is our short term run, this is our longer term run, this is our extremely long term run, like you can break it down into that. To me, like the higher you go, that's when the probability enhances, in my opinion. Um, but just by looking at this here, this is technically a bearish breaker, so I'm kind of curious to see how this works out. You have a high, low, higher high, breakdown below this low. So let's see, this is something I'm going to watch going into tomorrow. I'm not necessarily going to trade it, but because I don't really like trading futures when it's not during US session, I guess you could say. But curious to see, because this is our breaker and a bearish one in that on the hourly time frame. We also created this bearish fair value gap right here as well. So just curious. We'll see what happens there. Let me just confirm. I don't think NASDAQ. Oh yeah, it did. NASDAQ also created a bearish imbalance. And I guess if you really want to get technical with it, you do have a bearish breaker. So here's your first high, there's your low, there's your higher high, and the breaker actually respective right here. You'll notice, look at all those rejections right off of that level. So that was a higher time frame paint. So I wouldn't be all that shocked for us to retrace. But again, is this just a higher time frame trade just setting up? That's the question. And that's something that, and to be real, I don't know. I don't know if the higher time frame trade is going to play out here or it's going to take longer. So I'm not really in the market of guessing. I would much rather be given some sort of confirmation. And to me, the confirmation is as simple as some sort of imbalance to the downside. Higher the time frame, the better. As we go up in time frame, to me, the probability also will increase on that idea. So I know nobody cares about the dollar, so I'll just do that one on my own later. But let's take a look at Tesla here, because Tesla got absolutely wrecked today, and I tried to take a trade on it, and I'll show you guys. I took a lot of time on it too, but it kind of melted on me. So bullish range on Tesla still. I know it, you might say, well, this is all ugly. And while I'd say, yes, you're right, because you are, but think about it. If we break this down, this is a short-term bearish setup inside a longer-term bullish setup. Fair, okay? Inside a longer-term bearish setup, inside a longer-term bullish setup, right? So it's very fractal. It could be split into a million different pieces. And at some point, to me, higher time frame trumps. So when the higher time frame idea kicks in, and it's been pretty good so far. I mean, today's candle was very ugly, and I'm curious to see where we line up with on the daily, because just by looking at this briefly here, I'm not really seeing anything. I guess to be fair, you do have this imbalance right there on the weekly time frame that I removed it because, to me, satisfying these imbalances here was good enough. But we also did reject the midpoint of the imbalance formed back on the week of January 22nd. So, we're going to have to wait and see here. But structurally on the weekly time frame, not dead, in my opinion here. So now we look over here on the daily time frame. Same type of situation. Here's your gap. Again, you're going to see more gaps on smaller time frames on the weekly, unless it happens say into Monday. You might not get that massive gapper, and this was on a Wednesday, so it's just more jam-packed information, if you will. Daily candles only. On a weekly, you're getting the full picture of the week. So, but just by looking at this here, the one thing that I really don't like on Tesla here is that we slipped up on this bullish breaker. Doesn't necessarily mean it's donezo, in my opinion. If tomorrow we're able to reclaim, if there's no disconnect, it is what it is. Very sloppy, difficult to trade. But there was this imbalance here that has been satisfied. And just interestingly enough, if you look, there's your wick, body, wick. You also have this, but I removed this. This was our last bounce right here. I removed that because we did end up closing below it and we have an imbalance below. But you'll notice where we kind of close the day. Isn't that kind of eerie, right? Right at 50% of your bullish fair value gap right here on the daily time frame. So pretty interesting to say the least. And I didn't check towards the end of the day, but early on, even when it was getting smoked, the amount of bullish flow that was coming in was pretty noteworthy. So I just keep that in mind as well. I mean, look, the way I really look at flow in itself is more of a scanner. Tesla was a name that I've been, watching for a while now, but just to see that. It was kind of interesting because we were getting smoked. And, it was right around the time when I decided to take my longs, and I'll show you why, what went wrong, and, what type of perspective, I guess you can look at it from. And really, if this was the current range that I had mapped on it, right? So from that low, you'll notice here, no discount retracement. So to me, the range isn't set. We took out our hourly high right here, and notice what happens. One of two things are going to happen, of course. No kidding, right? But you're either going to get some sort of imbalance move through, which would, to me, be that level of confirmation for a continuation type move, or you're going to get a sweep of high and retracement lower. I have a ton of videos on why, because there's always a why. But the why to that, I have a bunch of videos on that for anybody who is looking. But you'll notice that we were chopping around and consolidating so much here, and we left behind 1, 2, 3, 4, 5 sets of relative equal lows. So when you see that, I know a lot of people think, oh, this is a double bottom, triple bottom, quadruple bottom, saying all this stuff, right? But the way that I look at it is, for each time we're bouncing here without going below the previous low, all that's telling me in reality is somebody went long here. And I think it would be fair to say, right? Let's just look at it from this perspective. For price to bounce like it did, let's just say here first, right? Somebody had to go long, right? Fair. For price to bounce here, we took out that long order, essentially, quote unquote, right? So whoever's going long here, stop losses are rated, right? Everybody, oh, they're rating my stops, blah, 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 right? Why are they rating stops? Because if there's stop losses here, what is that going to do? That's going to generate liquidity or take people out of their current position, right? That's really just the brunt of it. But now when you get to a situation where that low actually doesn't take out that previous low, what that tells me is somebody had to go long here to stop price in its tracks, right? And again, at this point here, what had to have happened? Somebody had to go long again. And this time, in order to prevent these lows from getting swiped, that liquidity from getting taken. So is it the same person? Who knows? Maybe. I think it would make sense for somebody to defend their position in that way, somebody who can actually move the market, right? And again, here, just another situation where now you have 1, 2, 3 pools of liquidity. Here's a fourth, and ultimately on your fifth, you sweep it, right? Taking shifting market structure on a smaller fractal or time horizon, and ultimately giving you that puke, right? Now, here's the thing, and this is where I was, going long and all of that. And my idea behind it was take out this liquidity here, and that should be some juice to go get these relative equal highs, because just like we had these relative equal lows down here, we have these highs left over above, right? 1, 2, 3, 4. So for each time somebody had to go short here, right? Fair. Somebody had to go short here. Fair, 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 right? Just to make sense of it, right? Why is price stopping dead in its tracks? Somebody's holding it back, right? That's the only thing that would make sense. And I know you have an imbalance here, but just to use that as a, I guess to me, the concept of understanding liquidity and how the market actually moves is much more important than really anything else. But you'll notice that obviously this imbalance got slipped through no problem. And, at that point, your trade is kind of donezo from that hourly perspective. Now, here's the thing. Again, you look at it from another perspective where you look and say, okay, well, the daily doesn't look too bad. The weekly really hasn't changed structure at all either. So let's just look at, our overall weekly. So when was the first high taken out? What was the first run? And really, it was from this low here to that high. We took that out. So we can look at it from this and look to that low to our newfound high over here. I'm sorry. So do we see this being a foot in the ground that again turned into our daily imbalance right here? Or do we see some sort of turtle soup move? And what I mean by that is, does this liquidity here need to get purged in order for that move higher? And that 182 level would satisfy this imbalance as well. So just a thought. I'm curious to see how things shake out tomorrow, but really just a bad day overall for Tesla. But just in the back of my mind is we have multiple sets of relative equal highs above. So that's what's kind of leading me to believe that I don't think upside is done so, despite a really ugly start to the week. So that would be Tesla. Let's see. Another one that I've been keeping an eye on here is Palo Alto. Obviously, I know a lot of people have been keeping an eye on that one with Pelosi recently picking it up after that earnings dump. But if we look from the weekly perspective here, you have a bullish market structure. I think that's fair to say. What was the price run that took out this high here from this low to that high? Here's your discount retracement, turtle soup. In fact, there's your bullish imbalance. And so far, so strong. We actually gapped up last week as well. Now, here is, I guess, the next idea here. And really, it just comes down to if we think this imbalance is going to get tagged, right, at some point or another, which is at 327, how can we be a little bit more precise with this and, not just kind of buy off open air? Because if you're looking at it from a weekly perspective here, like your entry was really here. At this point, I think it would be better off to try and refine it and be a little bit more, pinpoint accurate with it. So even if we were just to look from here, obviously you have your big daily gap to the downside. You also have this gap higher. So a gap higher would be a bullish volume imbalance showing you urgency to move higher. And I think that's fair to say. There's your gap up, and that's some urgency to move higher. But at this point here, even if we were to map this out on a much smaller little range, we just hit 50% of the range, and we actually closed on it today. And it's even more clear here on the hourly time frame. So if we come on over to the hourly, you'll notice. So this is, one that I drew, and it's playing out thus far. My NASDAQ one, obviously we didn't get down into discount just yet, but with PanW, I drew this on Thursday. And I just wanted it to get into this imbalance, right? And it really hasn't given us that juice just yet for like any sort of continuation type move, but we did get into that imbalance down there in discount. So hold on, let me just take off these fibs again, because I do not trade using fibs at all. It's just a way to measure. If there was another way to measure just like this, I would. So but so far so good. You got into that discount imbalance right there. There are a few more lower, which is a little ugly, but not all that sure it necessarily needs to do that. If NASDAQ is to make that move down towards discount of the range, which really, if we're just to go back into NASDAQ here, I mean, discount is a little bit away. It's still, 300 points? 350 points. So if that were to be the case, and again, that would be like my leading indicator in this situation. And I don't even know if PanW has a large weighting or whatsoever, but typically when the overall market isn't doing all that well, usually there'll be one, maybe two specific sectors that are doing all right. But if PanW isn't one of them, then that could very well get smoked down deeper into discount, because there are a bunch of imbalances down here on the hourly time frame. So that would stink. But so yeah, I mean, so far so good, or so decent, I should say. I mean, these after hour candles are a little ugly, so I'm not necessarily sure, but the bounce here off of that midpoint is also kind of encouraging. So and then of course you have Nancy Pelosi on the other end of that. So not bad. But let's see. All right, let's see what do we got next. We can look at Roblox. Yeah, Roblox is pretty sloppy. So here's Roblox. Here's another one that I tried out last week. And last week the close on it was great. Stayed inside that bullish imbalance right there. So this is really what I'm looking at. I just want to make sure that price holds true. I know it seems like it's so far away, but there are a bunch of catalysts this week that could reverse trend here. And ultimately, I'll tell you where, when we look at the daily or the hourly, where I think that this kind of goes bad. And really 36.34 from the weekly idea would be that mark. Let's see over here on Roblox. Yeah, so relative equal highs left behind. That was my idea behind it. Looking for that that run up there to satisfy. And again, it's something as simple as what had to have happened here. Somebody had to go short, right? What had to have happened here? Somebody had to go short again. In addition to protecting these short orders, right? to prevent stops. But you have that 47.20. You have this high right here, which is at 47.11. And you also have 47.67 without any imbalances in between there. So to me, when price does make its run, it's going to be a low resistance liquidity run, aka it should move pretty quickly up through there. But the way that this daily kind of closed out is just really ugly. That would be a volume imbalance there, and you got one more down here. So but that would be Roblox. Let's see on the hourly time frame. We're kind of just deeper into discount, but here's what I don't like about Roblox. It's that on this move, this was an earnings move, but look at the wick. The wick really doesn't offer you anything in terms of level of support or any sort of confirmation that we made the imbalance, that we are going to make, put our foot in the ground and continue to move in a different direction. So really don't have that just yet. We had it, we lost it, got back up here, swept this high, and continues to reverse lower. You have this imbalance down here, but I would prefer it to not go down there. That would be ideal. Apple, another name that got smoked today. Holding on for dear life here. I don't know, maybe I'm biased here, but I'm maybe not all that much this week, but I would be surprised if we don't create a bullish order block next week. Holding on to the bullish breaker here so far, bullish imbalance deep down here in discount. And again, let me just take off these fibs again. Don't need any of them but these. Good. Let me slide this over. Beautiful. So deep down in discount here, that's pretty much all my eyes are on, at least. A weekly close, I mean, really, it doesn't really go bad until 168, 168, whatever the low of this candle is, 167.90. Sorry, that's when I see it going bad. But Apple, honestly, really a slug, just battered by bad news. And it's funny how that works. Usually it's those names that get smoked with quote unquote bad news that start the run in that next rally. But it's been difficult ultimately for any name to kind of catch any bid with the way that these semis are going. I mean, are you kidding me? This is just absolutely absurd here on Nvidia. But where's the end, right? So to me, anybody's, oh, we're going to 962. Where are you getting 962 from? Right? It's just like, we don't have that information. We've never been there. So I don't know where they're getting it from. I think they're using some sort of projection or fib. And, honestly, just to be fair, I have no idea if it works or not. I have not done enough back testing on it. I don't think you really need to, because there's just so many names that, to me, I would rather trade something with a cleaner setup that meets the criteria for my model than to be looking for, trying to call a top on something that is just absolutely insane for, what seems like, the entire year so far. But yeah, all semis going crazy. Another 3% day on Nvidia, AMD as well. AMD was sick. We took it a couple, no, was it like 2 weeks ago? It was just it was getting sticky here on top of previous all-time high, right? You'll notice, look, wick, and then ultimately exploded, making that move above that 184.92, which was that new all-time high. And so far, what, after taking out a high, what do we look towards? It's creating some sort of imbalance, wink wink, right here, to give you that that idea or that level of confirmation that this will be a continuation type move, or you're going to sweep a high and you're going to reverse back down. But right now we're creating a second imbalance thus far here through another all-time high. So it doesn't really look like semis are slowing down at any point here. But again, the difficult part is, like, what number are we targeting? That's my question. Again, is it just going to be some random fib number or something like that we're looking towards, or is it going to be we don't have any information at this point, right? We've never been up here. There's no high that we could be targeting or anything like that. So I don't know. That's just me. So trading the all-time highs to me is a little bit more difficult. But until I see some sort of imbalance to the downside in another situation, to me, there's just no point in looking for anything else. So let's see. End phase as well got smacked up today, but no structural changes. So basically the conclusion I'm coming to thus far is that really not much has structurally changed, which is a good thing. But let's just go over here and see. I'm going to run through some hourly setups to see if I can find anything that uh, don't look all that bad um, for myself to look into for tomorrow. So NASDAQ, you got a 4-hour imbalance, but I don't really feel all that comfortable just yet. It's not in discount of the range. If I miss this run, I miss it, so be it. There is an imbalance here, but I'm not all that sure. Again, what number am I really targeting to that upside? I wish I had a number, right? But we've never been up here, so it makes it a little bit more difficult. But let's just keep on rolling here. ES very similarly, similar situation there. Tesla, the daily imbalance is one that is it's a little interesting to me. So let me draw that out. Where are we? 1 day. Whoops. And I'll pop that in here. So your daily imbalance was from there to there. And let's make it a funky color or something so I remember. Okay, there it is. And I'll just write in here. Okay, it's just so I have that for myself. Okay. Oh man, that was an ugly after hours too. Started to run up a little bit towards the end of the day, but got smacked back down again. But that's okay. Let's see. AMD, just an absolute runner. Here was another one that I posted Thursday. It just never came back down for me. So that's what it was. Didn't get it, Gonzo. So what does that tell me? That tell me the range just isn't set, in short. And if the range isn't set, I gotta wait. It is what it is, part of the game. But why do I have there's a random 0 line here? Yeah, okay, that's good. Yeah, it's just a massive range currently. Bunch of imbalances here. Okay, here's another right here. And if anybody who's watching and they're not so sure how I find these imbalances, I have a video that's more thorough, but in short, I'll show you. So basically, ready? I'll just zoom in. So you have 2 forms. You got a volume imbalance, which would be a gap. So a gap higher would be a bullish volume imbalance. A gap down would be a bearish volume imbalance. We would anticipate that level on a gap up to act as support. Bing, bing. On the flip side of that, we would view a gap down as a bearish volume imbalance or a level of resistance as price moves back to it. So that's one form of imbalance. The other form of an imbalance is a fair value gap. And what a fair value gap is, and let's see. Yeah, we really didn't have any situations. It's been a runner. Oh, here's one. I'll just zoom in and show you. So a fair value gap looks kind of like this, where you have a wick, body, wick, and notice in between both of these wicks here, you have, or inside these candles, there's no wicks on either side of that candle. So we would anticipate that level being a level of support moving forward. And really just the best part about it is just it really gives you structure for a trade idea. And what I mean by that is if you were to, I don't know, simply put, if you're to take a trade like this, you could have your entry at the high of the imbalance, your stop loss at the low of the candle that created the imbalance, and you look for profit at your next level of buy side liquidity, which on AMD you did not have. At this point you did. You had this high, but looking left, you really have nothing since we're at all-time highs. But that's the idea behind it. You can test the efficacy of them on your own as well, or just look at my pinned tweet. You'll see a bunch of them. But that's AMD, so not really. Somebody actually brought this up in the group here. This is a Snow on the hourly time frame. here's the thing. While on the weekly it looks fine, where is it? I'll just show you guys. On the weekly, low to your high, there's your discount retracement. I know it was an ugly one with that big imbalance candle down on that earnings dump. But structurally, you're still bullish, and you actually swept higher time frame liquidity or turtle soup. So that's not a bad thing. And here's your bullish imbalance here. This is a monthly bullish fair value gap right here. You might say, where the heck is that coming from? But here's your weekly. That's your weekly fair value gap. Wick, body, wick, nothing on either side of the candle inside. And then there's your wick down into it. So we bounce off the midpoint, which is also a important, level. Reason being, think of that imbalance as a range in itself, right? So if the middle of that imbalance, bouncing off of that could show you, or again, kind of give you a little bit of confidence that price is bullish within this range. And if that's the case, you would anticipate some sort of bounce out of it. But with the speed on this downsize move, if we look, I know we're going off topic, but very similar type move here was Boeing. And I'll show you, where the heck is Boeing? I have it over here. But just to show you that just because you're in discount with a bullish imbalance doesn't necessarily mean that it's going to immediately just rip back up for those highs, right? It could take time. And Boeing, it's taken a lot of time. But look how it's basing down here in discount. Very nice so far. So let's go back over here to Snowflake. So just by going back over to the hourly time frame, I don't really see it setting up all that nicely at this point. Reason being, so technically on the hourly, you are in a bearish structure, right? Took out these lows with that price run. If we do anticipate that at some point or another, we are going to see a retracement into discount, and discount of that bearish range would be here. Whoops. Right, at 50%. And the next question really is just, is there a, an entry at this point, or is there a reason for me to believe that this is actually the low that's put in? And I don't think so. I think you can see a little bit lower, maybe sweep one more low, because if we are to reverse, right? I know I'm kind of looking into the future and forecasting a little bit here, but if we are, let's just say we were to make this high right here, this level would have much less relevance to me. And I'll explain why. If price is to take out this low one more time, right? Get down here, sweep liquidity. So all of those who thought, oh, I caught bottom of this sucker, beautiful, I pumped it up to here. As that thing is coming back down, not only are you going to clean out all of those longs, but also you set up for what could potentially be a bullish breaker, which, ultimately you would need one more low. And then from that point, you would make a move above this candle's high. And then we can view that candle as a level of support moving forward as your bullish breaker. And oftentimes, again, this is something you can back test. When you see the breakers come in, typically that will lead to a kind of change in the current state of delivery, meaning if we were previously bearish, oftentimes those breakers will kind of shift the tides. I just know this example off the top of my head here was Roblox off of the lows. Here's your breaker: low, high, lower low, break above, retracement into that breaker, take off. Here's another one, end phase on the weekly. Ready? Low, high, lower low, break above that high, retracement into the breaker. Look how I have the entire candle here mapped out as that bullish breaker. There's your run off the low of it, right? So again, it's just a thought. And you oftentimes see that it does take out that low prior to one more time. Just all those people who thought they nailed the bottom here, right? If they didn't take their profits up at that imbalance there, they're giving them right back. Just a random staple of the market that you see happen on a recurring theme. But let's see, what else was I looking at? Oracle for it actually finished green today, which is crazy. But Oracle has a bunch of things going on for it right now that are pretty good. So I actually took my my trade off last Friday. Would like for some opportunity. But here's your, whoops, let me just zoom it out, low to your high. Why is that the price run? We took out these highs here with that price run. As you could see, we didn't get into discount, but we also didn't take out this high, right? So relative equal highs, double the pool of liquidity. You get your retracement down here into discount, imbalance, check, and you'll notice, what is that? Low, high, lower low. Did not quite make that high yet. So I would want it to kind of make that move above, retrace back lower, and then run for those equal highs at 127. So I hope I get a chance at that. But at the moment, not cooking all that much. Wow, look at this perfection on AI. So AI's range low to high, took out these highs in the process, retracement into discount, and so far so good. Made a run up, filled this imbalance here. So really my idea, I don't have options on this, I have shares, but there would be your, whoops, this is what it would be. It has not yet painted, right? This is a weekly idea, so I'm gonna have to wait for that to shake out. But do we form a weekly bullish imbalance? As long as we stay above this candle's high, which is 28.69, that's pretty good. So then ultimately next week I would like it to retrace into that imbalance and then take off from there. And that's just, the overall idea behind that name. Let me just come over. I forgot I have the comments on here. Yeah, I'm just gonna not do like a lot of requests, but yeah, there's not that many right now. I'll do them. So let's do Goog. I know ATL is a busy man. I'm thankful that you're here, but should have just texted me, dude. I would have seen that faster. I don't know. I really don't like Google all that much in relation to a lot of these other names. I mean, I was a little tight with my range there, but um, if we were to look at it from this perspective here, you have these highs, right? Just note those. So we took those out with what price run? Fair enough. There's your high, bingo. There's your retracement into discount. Boom, bullish imbalance, gone. Another leg higher. So at this point here, believe it or not, I know this is a very small fractal, and it is. Don't get me wrong, it's very small. But we did shift on a smaller fractal here. So don't love that. But here's the thing. You can also look at it just from, again, like a larger fractal idea here. No discount retracements on any of those pops. So does Google need to come down to 121 first? You have imbalances here. This one's filled. These two are now completely filled. It's just weird how, to me, Google's pretty darn weak in comparison to a lot of these other names. And again, just like we saw on NASDAQ running through the highs, just like we saw on ES running through the highs, AMD doesn't necessarily mean that it absolutely has to go lower here. These imbalances could still stick and hold on, but just for me, it doesn't really meet what I want. Do I have something here? Yeah, I have an alert here for 115. I don't know if that's something that is going to happen, but that gets us into a discount imbalance and also would turtle soup or sweep liquidity right down here into that weekly imbalance for a move higher. I think the monthly looked pretty bad as well. Yeah, so monthly, very similar. Yeah, I don't know. I just don't really like Google all that much now. I can totally be wrong, but your daily is still bearish. So here's your bearish market structure shift. There's your sweep of that low with this price run. Whoops. There's your discount retracement into bearish volume imbalance. Okay, and this is just the inverse to my model. I know you've seen a lot of bullish ones over the last couple of months because of how we've been moving, but there would be your bearish retracement. There's your low. My model completes here. So when my model completes, what do? We just move it over to our next. What was the price run that took out this low right here? Ultimately, it would be from that high to this low right here at the moment. Do I know this is the low? Not necessarily, but you do have a bearish imbalance up here, and discount of the range as well. So could it pop back up to that 142? Possible. I don't know if this is going to be the bounce spot or not. But when you see some sort of imbalance, oftentimes that'll show you that we are going to make our way into discount. So for example, on that first price run that was bearish, that gap higher there kind of tipped the cap of the market to tell you, yeah, we're going to discount here. So that's what it is currently. So I don't know. I don't really like Google all that much right now, to be honest. Let's see. SMCI. Okay, let's look at this. Yeah, this is most definitely on the DNT list for me. Do not touch. So obviously Berserk. It's just so frustrating. I was trading it here. We broke out here, and that's when I took my contract off. I would have ran out of time anyways, but it would have been in the money. But there it is. Massive range currently on SMCI, of course. There is your initial run through this high, right? What was the run that took out that high from this low to that high? Did we get a discount retracement? Nope, we did not. Range is not set and still not set. So I'm honestly, I really don't even look at this one anymore. It's just out of control. So yeah, just not with it. A lot of other names that you could trade and be fine with. I'm a bit scared of how market rises higher. We close every potential weekly bullish imbalance while we are going higher. Seems like we will close this week too. Yeah, possible. Here's just the one thing that I think is noteworthy. Look at your COVID dumper. Okay, look what happened following we taking out that all-time high again. Right, sticky, no imbalances, and we just absolutely rocket, right? So it's not a completely unusual thing. Like this has happened before on this all-time high, and this is from COVID. So the highs that we were at prior to, which were our all-time highs in February of 20, and again, just funny enough, just a discount retracement into a bullish imbalance for a run higher. So I'm not so sold on that. When I see that bearish imbalance to the downside, that's when I'll say to myself, okay, that's trouble. Look, throughout history, every time that we've seen a bearish imbalance on the weekly time frame, typically that means we're going down. So that would be one right here. We went down for a couple weeks. There's another one right here. Went down for a bunch of weeks. Let's see. There's your imbalance here. This technically just gets you into discount. Where is it? Oops. 50% discount. Bingo. Bullish imbalance right here. There it is. There's your run for high again. So, again, I mean, really have not shifted market structure bearish when you look at it from a higher time frame like this in a really, really long time, if ever. I don't even know. I really don't think that we've ever shifted market structure bearish, to be honest. I'd have to go back and look, but I just think it's eerily similar to how we reacted to the COVID all-time high. And when we took that high, we got sticky for a while and we did grind higher without forming really any type of imbalance to the upside just yet. I think that would be awesome if we were to get something like that, just to give us or make us feel good about it. But again, really not all that interested in trying to call top on a moving train. I think it's just a little too crazy. Let's see what else. Took two, lost one, won one. Yeah, it's me too. Just didn't. Well, technically, I was one win, two losses if you're counting the Tesla. But can you check SE? Have done a weekly, monthly breaker. Also, yeah, I already did Apple. SE. I know you were getting upset about this yesterday, but I just. I do a lot of these names. So, if I can't get to every single one that you request, I apologize, but not really. So here's SE. Yeah, we looked at this a while ago, swept the COVID low. So far, so good. There's your bullish breaker, low, high, lower, low. take off, retracement into the breaker, great. Just recently, or actually we did not yet separate from this imbalance here. Weekly that would be a weekly bullish volume imbalance. I know it's only Monday, so there's a possibility that does not complete. You're also in the process of creating a bullish weekly fair value gap. Buy side liquidity currently sits at 67.08, which in this smaller fractal here of this bearish range, believe it or not, hold on, let me just fix this up. Whoops. Yeah, we're approaching discount of a bearish range. So it's a little late here, but that was a sweet one. Let's see what else. When you're using your model, do you have extended hours turned off? No, I think any bit of information is valuable. So I do keep on the extended hours. I know it's choppy and gross and everything like that, but it stays pretty true to whatever the current setup is. So I do keep it on. I think it's important to have that. That's why even if you look at SPY or Qs, I chart using the futures names. And the reason I do that is because you can actually, to me, get pinpoint levels rather than just a gap. UPS. All right. UPS. Currently in a bearish imbalance here. We gapped up on the weekly. That's pretty encouraging. Not really set up for me, to be honest, but that's a bullish order block, respecting that nicely. Yeah, not all that bad. It's pretty solid, actually. Just this imbalance, I think it could take some time to get through, so just really not too interested otherwise. If there was no imbalance here, that would be great. I would be saying to myself, let's go. We're running up to buy side. We got that imbalance right there. And, let's roll from there. But I'm just curious, does it need to get deeper into discount here? Because if we look at it from this perspective, on each one of these moves higher, okay, that's the price run that took out this low. There's your retracement into a discount imbalance. Check. There's your run through lows. My model's complete. Let's do it again here. High to low. Discount retracement. 3 drives higher. Dumper. One more time. Imbalance. Puke through. Okay, so what was the run that started this most recent run down? Yeah, so there's your low. There's your retracement into discount of your range. There's your bearish imbalance, and we drop. Do we put our foot in the ground and let this higher time frame idea come into play, or does it need to make another low? That's the question that I do not have the answer to, unfortunately. I wish I did, because there's actually quite a few imbalances here to the downside. I again don't necessarily say these absolutely need to get filled in or anything like that. But really, the way I look at a lot of these would be like, I would just prefer to do this and say, okay, my bias is higher, but I don't know if this is the one just yet. Okay, so if that's the case, I can look at it and say to myself, all right, let's just look at these from an hourly fractal. This way, if it goes my way, great. I still got some skin in the game. But if it doesn't, I'm able to be more precise in terms of where my stop loss is going to be, right? So for example, here's your first run. We took out these highs with that price run. There's your discount retracement, bullish fair value gap right there. Check, run through highs. My model completes. There's one. Up to our next high here. Did we get a discount? No discount retracement. No discount retracement. No discount retracement. There's your discount retracement. Bullish imbalance. Check. There's your run for highs. My model is complete for the second time. Let's move on over here, and we'll go from that low to this high. We took out that high with that price run. There's your discount retracement. Beautiful. There's your run for high. My model's complete again. Here, one more time. Or it's probably going to be 2 more, but there's your run through this high. There's your no discount retracement. The range isn't set. That's a trade I miss. It is what it is. Back over here, there's your discount retracement. There's your run for highs. Beautifully done. Okay, one more time. Get a little deeper with your little turtle soup action. Run for highs one more time. So this is what we're currently sitting at, low to your high, and you're just about in discount, so again, this is kind of like the Tesla trade I took today that didn't go the way I wanted it to, but my trade is mapped out. I have this imbalance here. I have my stop, which would be below the candle that created the imbalance, and I'm chilling. What would be buy side? Really, yeah, at this point in time, you're really just working with um the previous high at 152. You have an imbalance, so that's where it gets a little tricky. And then at that point, you'd have to go down in time frame to see what kind of little bounces and humps that you got inside that specific candle, right? So if this is an hourly candle, you're going to get two 30-minute candles. You're going to get four 15-minute candles. You're going to get, 25-minute, whatever it is. I don't know. I'm just talking quickly, but you're going to get a bunch of potential highs and lows within that specific candle that you can be using as potential areas of liquidity for whatever the draw is in that situation. So let me pack back over. No, I cannot give you any advice. I'm sorry. Oh, okay. Yeah, this really isn't advice. That word is just, it's dangerous. Nothing I'm doing here is giving advice. I'm literally just talking about how I go about it. And what I mean by go about it is how I, kind of use the charts and the technicals as a way to kind of map out my trades. I'm not always right. I promise you, I'm not always right. No one is. If anybody says that, they're probably a liar, and you should probably unfollow them. But everybody's going to be wrong, but everybody's got their own style. And that's why when I do these, I'm showing my style. I'm not saying do this, do that. I will never say that. I don't think you're going to be good at trading if you do that, if you follow somebody else's ideas all the time. But this is not advice. You're just asking me how far out do I go for calls or puts, and do I have a strategy on it? And yeah, I do. If I'm looking at it from a weekly perspective, I need to get much more time. It can take a lot of time for that trade to digest. Think about it. If it's taking a week for that trade setup to, in fact, set up, it could take weeks to play out, right? Flip that over on the daily. If you're looking at it from a daily perspective, it took days for that to set up. It can take days for that to play out hourly, right? This is something that I'm going to talk about with the group in an hour. If you're looking at something from an hourly perspective, taking weekly contracts to me is a little crazy. It's taking hours for that trade to set itself up, right? And if that's the case, it could take hours for that trade to play out, right? And if you are, and typically when you're looking at it from a higher time frame, the range might be a little larger, right? More information. There's more time, right, for price to move. So really, I don't really consider looking at short dated contracts unless I'm looking for an immediate move, and I need to trust myself that if it doesn't go my way, I am getting out of that almost immediately, right? I need to trust that my risk management is good enough for me to get out of there, because you can get whacked so hard so quickly on those short dated contracts. And to me, it's just like, why even bother? Why not just grab what are you spending, a couple extra bucks to get yourself some time? You're looking at a weekly setup, and you think that it's going to complete today. Why is something going to move $40 in a day? If it's earnings, then you're kind of just rolling the dice anyway. So I don't think that's the best idea. So let's see. So just DraftKings and Net, and then I'm gonna, or in Fastly, I'll do that one too. So let's see. DraftKings Monster, real nice. So technically, DraftKings does have a bearish structure here. At some point or another, if you're, you like the company, you would anticipate this obviously moving higher. But I'm looking at it here. You have this one bearish imbalance here that we did end up filling up. Came back down, retraced into a bullish fair value gap, and took off again. Yeah, DraftKings looks pretty solid. Let's look on the daily. It's actually a really good one so far. So we have DraftKings daily. I'm just going to remove the, we'll work on a smaller little fractal in time here. So if we are to look at DraftKings, let's just look at the first time. It got dangerously low, but really deep in a discount. High, low, discount retracement, run through highs. Took a while, but got it done. Here's the price run that took out that high here was that run. There's your discount retracement. There's your run. My model's finished. Here's it again. Low to your high. Oh man, that stinks. Didn't get into discount, but did hold the daily fair value gap here. So again, very similar to what we just saw in NASDAQ last week, where we did not retrace into discount of that range, but we made another leg higher, and that can absolutely happen. So yeah, I mean, DraftKings looks pretty good. Let's just see on the daily. I know we're going far over, but let's see if we're running into any daily levels, because on the weekly, we don't really have all that much until about 50, almost 52 bucks. But the daily is going to offer us some more. So that's a bearish volume imbalance right there. Gap down showing you urgency too. Move lower. Okay, here's another bearish imbalance. Good. Let's see. Here's a bearish fair value gap right there, untouched as well. There's a lot of untouched levels here. Let's see. This was a bearish fair value gap worth having on, but you know, we did fill it and reject it. And that's currently where we are. Yeah. So let's zoom on over. Hold on. There it is. Okay. Yeah. So there's your rejection. That's your daily level. And we're making our way up and through it. So you are working with something from 45.97 to 46.45. And that one I believe was untouched, if I'm not mistaken. So that would be DraftKings. Let's just look at the hourly too. You got relative equal highs up here. So high, no imbalances in between. And yeah, so let's just zoom in and see what we can do in terms of mapping our range. Okay, higher time frame liquidity sweep here. Good. Let's just see. Hold on, I want to look at one more thing. Okay, so your range at this point would be, I'm just gonna walk through. There it is. There's your discount retracement. There's your run for highs. So really, I would have it set like this to this high. Beautiful. Discount retracement, good. Multiple bullish fair value gaps here. This one in particular that we held. Whoops. And that's a bullish order block as well. Not bad, huh? And so far, so good. I mean, even here, you have this. It's just worth noting, I guess. And okay. And notice how you swept that low. Again, one more time right here. Turtle soup runs for highs. So yeah, it would finish at 45.74. If we look at the most recent little run that we had, it's actually it's going to look funky, but it's going to be from this low here to that high. No discount retracement, no range set, and yeah. So no range set even on the most recent run. So really, if you're a bull or you're in this, you kind of want it to get up into that 45.74 quickly. That would be the ultimate destination. No, I can't do ARM. I'm only doing a couple more. Let's see. Net. I gotta go. I'm doing another live in a little bit, so I need to eat and stuff. Here's net. Yeah, net looks. I like this. I posted it yesterday, actually. So overall, look, you have. I mean, technically, it is. There's your run for highs. Boom, Gonzo. You do have a bullish trend. This is a very deep discount into that bullish trend. But my model completes at 116 and you have 132.45 buy side above it. So net looks solid. And so I posted that one yesterday. And Fastly. All right, I won't forget. There she goes. Okay. So we haven't I know I haven't charted this one in a while. bearish structure currently, but let's just see. You did make that imbalance. Wow. Okay. So do you get, oh, whoops. Do you see turtle soup? That's the question. And what that would be is just that liquidity sweep on the higher time frame. Do you sweep that before looking higher? The only tricky part about that would be you technically have a bearish breaker as well. High, low, higher high, sweep of that low, and you're working on that. So if it is to sweep that low, you kind of want it to sweep it and take off. But yeah, that's a big imbalance down here. That must have been earnings or something. But yeah, that's more of a waiting game one. That's just the bearish imbalance that we're rejecting. Every move you can justify, I promise. There's just no made up stuff. All right. Oh, cool. Soul. Nice. All right. Since ARM is the last, I'll look at ARM. Let's look at ARM. I could tell you already. I'm not interested, but okay. So there's your low to your high. No discount retracement. So just not for me. But you do have this bullish volume imbalance here. The question that I would ask myself when I look to trade something like this is, what am I targeting in reality? Where is my stop? Where does the trade go bad? So really in this situation, I wouldn't want it to close below that low at 131.27. So that's 7 points to the downside for a potential 30 or 27, 26. That's not bad. If you could stomach it. I know 99% of people probably couldn't stomach that. That's 7 point down on your options contract. That hurts. That's the difficult part. But I think that's all. Let me just make sure. Yeah. All right. So I'm done here for now. I will catch everybody next time around and keep on learning some new stuff. It's very important. Days like today can really put people on blast who've kind of just been skating and going through the motions. So stay on top of it and do your best to continue to improve, and don't leave your risk management in the gutter. All right. So I will catch everyone next time.